talk about what the CPI report could mean for the Fed's next interest rate decision later this month. Joining us is Roger Ferguson, the former vice chairman of the Federal Reserve, former CEO of TIAA, and a CNBC contributor. Roger, good morning to you. Always good to see you. The markets are giving the Fed a free pass for 25. Does this change anything?
Certainly, I think the market is right. The 25 in the upcoming meeting has been well telegraphed, and I don't think this changes anything. Obviously, it puts into question a bit more whether or not the September meeting is as live as we might think. There'll be a great deal of data between now and then, and there'll also be the Jackson Hole conference, so we'll hear more. But I think the market is right, 25 upcoming, and then September, I think let's wait and see. I wouldn't take it off the table at all just because of this one report, however.
Yeah. Do you think, given the rise that we've seen, in stocks in general, in tech stocks particularly, the larger mega cap stocks, some of the speculative names, do you think that concerns the Fed? Do you think that factors in that what they do is not working to dampen asset prices in this arena?
And I don't think they're focused on a specific sector. So the tech stock being up, I don't think is something that comes across at the FOMC table. As you well know, they do talk about something called the wealth effect and financial conditions. And so continuing strength in the equity markets certainly comes into play because it creates forward momentum for consumers and investors. It, in some small way, loosens what's called financial conditions. But I don't think they're fundamentally targeting equity markets at all. They're looking at those inflation numbers and trying to understand what's driving that. And some of that is very much more about wages, which I think are much more focused on than the valuations in equity markets right now.
Well, at least the initial market reaction, Roger, indicates that markets for now are pleased. Markets for now believe that the Fed may be at bay. And as you mentioned, September may not be as live, maybe even November. Do you think that's the right takeaway here, that it looks like what the Fed has done, like maybe they actually stuck the landing? Maybe that's an increasing possibility that there is that soft landing.
Look, I think there's an increasing possibility that soft landing, which is a very positive thing. Fortunately, we still see forward momentum in many sectors. However, I think it's really too early to declare that as a done deal because, as the Fed itself has said, much of the work that they've done has not yet shown up in markets. So we haven't actually seen the full impact of the increases in interest rates thus far. And there are some sectors that are weak that historically have spilled over into the broader economy. So think about the real estate sector. And the final point to note here is, if we are fortunate enough to have a soft landing, it would be, I think the second or third out of 11 or 12 attempts the Fed has had to do that. So too early to say soft landing. Certain positive news that soft landing possibilities perhaps have increased.
If you're, excuse me, Roger, if you're still on the Fed and you were entitled to a dot, I'm just wondering where you would stand in terms of how you see the rate hike trajectory given this latest piece of data and what you are seeing yourself in the economy.
So what I'm seeing in the economy is really very mixed, with some sectors that are more interest sensitive and struggling a bit more than others. I think I would, based on this number, recognize that September really would be a time to take a close look. Wouldn't take the 25 basis points off the table at all just yet, based on one number, because, and we've heard President Daley mention this the other day, I think they are now in what they would describe as a risk management approach. And I still believe they think, the vast majority of them, that the risk of stopping the hikes too early is greater than the risk of continuing and going maybe one too many. And so I think that's why September is very much on the table, and we should not in any sense think that they are done at this stage. I think at least September is a real possibility.